All right, so you should be seeing my nice little blue blob there. And so I'm going to talk a little bit about tax preparation. If you want to get into the tax field in a CPA firm, if at Cal State, if you're at Cal State or at any of the other colleges, you may have what's called a VITA program that you might be able to participate in. And the VITA program is very good in terms of giving you an introduction to what tax preparation actually looks like. In other words, how you take the client's documents and create tax returns. But it's very different from what we do in a CPA. So the big difference is if you work in VITA or if you use TurboTax or TaxCut or one of the personal tax preparation programs to prepare your tax returns. It generally takes a long time, right? A VITA preparer might prepare 50 returns if they're really good during a tax season. We need to do that a week. And because we're charging a relatively high rate of $200, $250 per hour. And so if we spend 4 hours on a basic tax return, which you might in a VITA program, we would have to charge that client $1,000. Well, most people with basic tax returns aren't paying $1,000 for tax preparation. And so we have to have things very much automated. And so automation and processes become the key. Software, obviously. Well, you can get TurboTax Federal for free, and then if you buy a state, it might cost you $20 to use TurboTax. We spend roughly $50,000 a year on tax software. That's just the tax preparation basic software, not all the add-ons that we have along with it. And so, what do you guys think? What do we get for 50 grand? What does our tax software do that TurboTax doesn't do? Anybody?
I believe the main thing would be sort of a consultation of their actual business.
Yeah, not so much. I mean, the business stuff, we deal with separately. But the big thing is that our tax software is, call it smart, okay? If you enter something in the wrong way into our software, it's immediately diagnostic and go, hey, you can't do that. Okay? So if you add numbers in two different fields that can't coexist together on a tax return, it's going to throw it out and go, no, you can't file this return this way. And so we essentially rely a lot on our software to deal with the actual compliance. In other words, the actual rules are being applied at the software level rather than entering things into a form.
Hey, Pete.
So, yeah.
It sounds like there might be a problem with your volume going in and out, but it might be when you turn your head. I think when you turn your head, it might be causing your volume to cut a little bit.
I'm wondering if okay, well, maybe I won't turn my head so much. How about this? So when I started, in tax preparation 30 years ago, the tax software essentially was form fill software. You had to know the tax code. You had to know all of the forms that you were going to use, and you had to fill in the information on the form itself. And the professional tax software would then give you diagnostics. It would say, hey, this number doesn't work with that number, but you were still basically filling in the tax return from the get-go. Now we essentially recreate the client's W-2 forms, 1099 forms, and then the tax software does, based on the checkboxes that we fill in and the numbers that we put in, it puts it in the right place on the tax return. So much of that is now fully automated. What we're starting this year is that we're actually using a software called Autoflow. And so we're going to be scanning the client's documents up front, and we actually use optical character recognition to take that information and fill it into the tax return. So there's no longer going to be much in the way of keying numbers into forms or the return itself or the software. All of that becomes mostly automated. We get a diagnostic report that says, here are the numbers that we might not have read correctly, and we just have to verify those against the original forms. But so it becomes a very much an automated process, and that's where we're going in the future. I mean, right now you can link your bank account to QuickBooks, right? You can, if you use TurboTax, you can link QuickBooks to your TurboTax tax return, because those are all Intuit products. And so as long as your setup in QuickBooks is correct, you can actually go from from your bank account to a Schedule C on your tax return, your business sole proprietorship form on the tax return, without a single keystroke. It'll do all of that for you, provided that you group your clients and you have the right accounts and the right account set up in your software. And that's where everything is going. Okay? And the reality is clients don't see the tax form. It's not a value for them, right? Every competent tax preparer should end up with exactly the same tax return given the same information if you're following all of the tax rules. So the client just sees a completed tax return as a necessity. They're really looking for a personal relationship. They're looking for somebody who's looking at their life goals and their life circumstances to advise them on where to go with their taxes, how to save taxes, how to be better prepared for the future, make the correct estimated tax payments so there aren't any penalties, all of those types of things. And when you're entering into the accounting field, you pretty much are it's either audit focused or tax focused. In some firms, you do both. In our firm, it's more separate, where you don't really do a lot of crossover. But I always say, tax preparation is an individual sport. Auditing is a team sport. If you are going to have a relationship with that individual that you're doing tax preparation for, you're gonna know things about them that they won't tell their own kids. And so these are things that you have to keep in mind when you're entering the profession. And excuse me. The thing that you're going to find is that things are changing. They're changing very rapidly, but that personal relationship part is going to remain in place no matter what. And so the final thing there is, talks about providing value, and that's really, that's what you have to focus on. As with a lot of other things, it's like you can go to Starbucks for a cup of coffee, or you can go to AM/PM for a cup of coffee, right? Both are going to give you a fairly decent cup of coffee, but you're going to Starbucks for the experience. You're going to Starbucks for, more than just the coffee itself. And people go to see a CPA firm for more than just the tax return that they sign and send in to the IRS. Any questions or comments? I mean, what are you thinking will be have to be your focus if you're going to get into tax preparation in your future professional career?
Yeah, for me personally, I think it's definitely the personal relationship with the client.
Okay. Amy, any thoughts?
I would have to agree with Ryan that it's about you would have to develop a personal relationship with your client.
Okay. Roberto?
Definitely, like, I'd agree with them. Clients should be like, I guess, the personal relationship between the client and the firm itself is, I guess, above all.
Yeah, that's actually, presents one of the challenges in firm succession planning and continuity because of that personal relationship. It's very easy for us to send a new team of auditors to a governmental organization to go audit them this year versus last year. Yes, they have, they meet once a year, just like we do with our tax clients a lot of times. But there just isn't that personal relationship that exists when you have a one-on-one meeting with somebody talking about their finances. And so it's very difficult to say to a tax client from one year to the next, hey, Bob's going to do your tax return this year instead of Pete. And that's the challenge for I want to retire someday, actually not too long from now, and what's going to happen to my tax clients? How can I make sure that they're going to be happy with whoever is going to take care of them in the future? And how can I transfer that knowledge about the client from that I've gained over the years of meeting with them? Sometimes I have tax clients now that I've been working with for 26, 27 years, and second generation tax clients that I'm working with that are now business owners that were children when I started working with their parents. So it's a long-standing relationship and becomes very important. So anyway, moving on to software and technology. Okay, we generally go to the AICPA Engage conference, which when we don't have pandemics going on, are held usually in June in Las Vegas, and everything is on the table from software auditing and accounting and the future of the profession and so on and so forth. 3 years ago, I believe it was that they were predicting that tax preparation as we know it will cease to exist by 2025. So, in other words, there isn't going to be a need for individuals to prepare a tax return in 5 years. And a lot of that has to do with software and technology. If we had the political will to essentially get rid of tax preparation, which a good sized chunk of the economy, there's a lot of money to be made in tax software and in tax preparation. So I'm not sure the political will is there, but essentially the IRS is now, as of this year, receiving all of your W-2 and 1099 documents by the end of January. That's the requirement for all businesses to submit those forms by January 31st. So essentially, for 95% of all tax returns, the IRS has all the data necessary to prepare the return before you even make an appointment with a tax preparer or buy your TurboTax software. So the IRS could simply create a tax return for you, send it to you and say, here, if you agree, sign, and we're done. Right? Would be the least expensive method of tax preparation for anybody out there, would be relatively error-free, but it would require a fundamental shift in the way we do things. And so is that going to happen by 2025? Probably not. It may happen at some time in the future, but I don't see it happening in the next 4 or 5 years. But where we are going is automation of most processes. So like I already mentioned, we're doing the scanning, the autoflow of documentation. We are experimenting this year with a new portal that also links directly from the client's financial information and institutions into our software. So you have a portal, the client logs in, they can upload any documents that they have physically, like charitable donation receipts, the business financial statements, or so on and so forth. But they can also link their bank accounts and their investment accounts directly to the portal. And so what happens is when TD Ameritrade or Merrill Lynch issues that 1099 to the client, it goes directly from them to our portal and directly from our portal into Autoflow and is read and entered into the tax return, and have to double check the number to make sure that all of that is done. So we're essentially eliminating the need to have tax interns that come in and punch data into returns, right? This year, they're going to be doing a lot of scanning and checking numbers. But in a couple of 3 years, that also will be automated. And so the focus then becomes on even the interns will have to have some basic tax knowledge to be able to actually look at the tax return and determine whether things were entered and how the actual tax laws apply to that particular client's tax return in order to be useful to us. And that means that, again, it's a fundamental shift in how CPA firms are doing their work. And it is going to be an overwhelming part of your professional life. Keep up with software and technology and be ready for those changes that are coming. So over the next 5 years, more and more and more of that. More linking of financial accounts, more linking of all things financial to in every way. What are some of the barriers to that? Joshua, what do you think? What are barriers to linking everything electronically?
Well, I mean, linking electronically always provides a potential inroads for data manipulation and black hat hacking, of course. Someone can take advantage of systems, so we have to make sure our defenses are above the standard, of course. Absolutely.
Data security. Data security is, one of the biggest issues facing us in all walks of life. We still have clients that will just email us W-2 forms. And you go, it's like, why are you sending in an unsecured email documents that have your social security number, your address, your date of birth, and everything that a hacker would need to get into everything that you own. So we've now been through two ransomware attacks of the IT firms that we deal with, and CCH, which is our tax software provider has had a ransomware attack. These are ongoing things that go hand in hand with all of the technology advances that we're using. And so data security is going to continue to be one of the biggest issues that we face every day. And so, to that extent, it's like even our portals now, when we deliver a tax return, we use a software called Safe Send Return. And it actually, in order for the client to sign into Safe Send Return to retrieve their tax return and sign their 8879s, they have to have personal information that they can regurgitate, where they lived 15 years ago, a credit card account that they currently own, or something along those lines. They have to go through a series of questions to be able to answer that, get access to their tax returns as we deliver. And so all of that cyber attacks and data theft is where the money is at for criminals these days. Easy money. And so they're going to continue to focus on that, and we have to continue to moving forward and making sure our clients' data in the best way possible. And so what does all of this stuff mean for you guys, the CPA firm leaders of tomorrow? Drake, what do you think is going to be important for you?
Well, just being knowledgeable on all software applications. I attended the Cal CPA event. It was like a rewards night. Now I'm not sure who. I can't remember his name. The one that's in charge of Cal CPA, but like they began to get into talking about how like the accounting major itself is going to see a huge shift in, like in 5 years of more like and information systems base, so that way we'll be more adaptable to these to all the software applications we're talking about.
Absolutely. I mean, yes. So actually we now have data IT auditing that is part of the kind of the overall scope of things that CPAs are doing. We have in Cal CPA, we actually now have memberships for non-accountants that are working in the accounting industry. We have our IT professionals that work for firms that are now becoming part of the team of auditors. They're becoming part of the team of the audit firms. And so the biggest thing that you have to be ready for is be prepared for change. Nothing is going to look the way it looks today in 5 years. Software is going to be better. We talk about artificial intelligence. Okay, the reality is there is no artificial intelligence. It doesn't exist yet. Okay, we know what it would look like, but we have exceedingly capable supercomputers. We have what is called brute force computing that is revolutionizing the industry as of today. If you look at the medical field, for instance, there are thousands of articles that are published every year about new medical technology, new medical procedures, better use of medications, so on and so forth. If your family physician had to read all of these to keep up with what is changing, that's all they would spend their time on, right? They would do nothing but read medical articles. They'd never see a single patient. But IBM's Watson can sift through all of that information and apply it to a particular case in a matter of minutes. And is Watson intelligent? Is Watson able to decide and make a moral decision as to what is proper to use in a particular case? No, can't do that, right? But what it can do is it can very, very quickly sift through massive amounts of information and come up with potential solutions based on a huge data set. And, you know, in the accounting field, when the tax code is 4,000 some odd pages long, there are hundreds of revenue procedures that are issued every year. There are Treasury publications that are issued every year. There are Treasury bulletins that are issued every year. And, you know, we do have some people in the industry that's what they do, is they analyze that stuff and they advise the rest of us on, you know, here's what we think you should do. But the acceleration of the amount of data that is coming into the profession is such that you really have to have that brute force computing capability to be able to sift through all of it and quickly give you answers. Because, you know, how long does it take to search through hundreds of documents to find the right answer? Takes a long time, and the clients just aren't willing to pay for that. They want us to have the knowledge, right? But it's impossible to have all of that knowledge. What we really need to be able to do is have the capability to quickly research and come up with the right answer. So what are the requirements, right? I mean, we already touched on it. Learn, and keep learning. It's you know, every minute of every day, you're trying to pick up more information, trying to focus your attention on a avalanche of data and information that's coming at us. I probably on a daily basis get 30 to 50 emails about changes, how to interpret something that's new, and you know, we have a research library that we pay for that can easily keyword search. We have tax software updates that come out every other week this time of year. And all of that is just to keep up with the things that are changing. If you just take a very simple thing like the payroll protection program loans that came out in the CARES Act as a result of the pandemic. So there's this loan forgiveness, right? And so the first thing that comes out is this is not going to be it's not going to be taxable money to you, even if the loan is forgiven. Normally, loan forgiveness means that you have cancellation of debt income. Well, Congress says, nope, that's not going to happen. Then IRS looks at it a couple months later and says, oh yeah, but what we're not going to do is we're not going to allow you to deduct the expenses that you pay for with the forgiven loan. Well, if I can't deduct the expenses, even though I don't have to recognize the income, it's the same thing, right? The bottom line just went up by whatever the amount was that I got from this loan forgiveness. Then there's discussion back and forth about when are you going to recognize this income? Are you going to, or not be able to deduct these expenses? So eventually in November, IRS comes out with a pronouncement that says, hey, regardless of whether you have actually applied for loan forgiveness, if there is a better than 50% chance that your loan will be forgiven, you can't deduct those expenses on your 2020 return, even though you have 12 months from now to actually apply for loan. And so then we get Congress enacting in the last week of December a second round of stimulus. And in that package, they said, oh, we go back to our original intent. We don't want this to actually add to the bottom line. So you now still get to deduct the full amount of the expenses, even if the loan is forgiven. So in a matter of 2 months, all the planning that we did with our tax clients, our business tax clients that went and got PPP loans, went basically upside down 3 times. It's like, oh no, you're gonna recognize all of this income in 2020. No, you might be able to shift it to 2021. No, it's definitely going to be in 2020. Oh, you don't have to recognize it at all. And that's just one item, right? And so it's very, very, very important that we keep up with all of these changes. And that's the next thing, is you have to expect that the changes are coming, and they're coming faster and faster. I think there was a FASB, the Financial Accounting Standards Board. I think it took 10 years to get to the first 10 or 12 FASB pronouncements. There were probably 10 or 12 in the last year. So everything is changing because of technology. The accounting standards boards have to keep up with those changes and adapt their procedures, and it just is going to continue to accelerate. That's where the focus is going to be in the future. It's not in filling out the tax return, but being able to advise the client on what's happening today and how does it affect them. So I say on there, use technology appropriately. So Brian, what do you think I mean by that?
Be familiar with the technology, but don't rely on it completely.
Well, and what else? I mean, is all technology good?
Technology helps in some sense, but not all technology is great. I mean, you guys have, I assume, shifted to more of an online sort of scan-in document style system with taxes.
Correct. And so, that's my point is, when we say appropriately, you can be an early adopter on everything. You can, every time something new pops up on the horizon that might save you a little bit of time, you can jump on it and you can, use it, and it'll use your clients to some extent. And a lot of times you'll find out that it's not all that it promised to be in the beginning. So every time a new technology emerges, you have to do an analysis of that. Is it possible to use it within your existing framework of the other information, IT pieces that you're using in the firm? Will it actually have a positive impact on those processes? Will you have to redesign everything? One of the podcasts that I've subscribed to talks about being technology it'll come to me. I'll have to come back to that. I mean, but there's a difference between simply using technology and using technology appropriately to fit with the overall values of the firm, the overall goals of the firm, and what you're doing for your clients, and making sure that you're client focused and going on. But and then the final one there is be ready to shift focus. Tax preparation, like I said, as we know it, it's not going to be around for a long time. There isn't going to be a need for us to fill in tax return, tax forms for probably, if not 5 years, in 10 years, that will disappear completely. So it's really being able to read that information and proactively advise clients on what actions to take to affect their taxes in the future. So, shouldn't say future tax twice, but okay. You know, we got the crashing spaceship there. So automation takes care of most compliance requirements. Talked about that. We link most financial information to tax software, and the tax software itself is going to come up with the right answer most of the time, even today. But that's only going to become more prevalent and will get better and better. Blockchain technology is well behind where it was expected to be as of today, but it's accelerating and more prevalent, and will eventually eliminate a lot of auditing requirements, and should provide us with pretty much audit-proof, fail-proof numbers that can be moved directly from a financial institution to tax preparation software or to the IRS directly. I mean, without even going through a tax preparation software. We have a rapidly changing landscape in terms of technology, what we're doing, what we have to do. Every single year, we have new software that's available to make things more automated. And we just have to be able to sift through what's good, what's not good. But the reliance on the technology is, and with that, our focus has to shift even more to the relationships and the advisory function, and providing value to the clients, something that the client actually recognizes as being valuable to them, rather than a simple, here's your tax return, here's your financial. Take it to the bank and don't call us again next year. That model of work is going to go away, probably by 2025, but at the latest by 2030. And so that's the profession that you're coming into, or will be coming into, if you decide to go that route. And it is across the board in all professions, not just in accounting. Medical care is going to change significantly. Engineering, architecture, a lot of things can be done automatically. Software can handle engineering tasks, and the focus is going to be on how do you make the process better for the clients, rather than are you able to prepare a correct tax return. And again, that question of will the IRS simply take over basic preparation? Again, the technology and the data already is there, and so it's very much a question of are we going to go there on a political and social level? Are we ready? Are we ready to go there? It's kind of like cash. The reality is that how many of you pay cash more than 2 or 3 times a week for anything? Yeah, I see a lot of head shaking, right? The people my age and older, we have this love affair with being able to hoard cash. You have old people that they have $5,000-$10,000 in cash sitting around in their house somewhere, just in case something bad happens. And even to me, that's like why? What's the purpose of doing that? How many problems can we eliminate by getting rid of cash entirely? And cyber currency, Bitcoin, those things, and blockchain ultimately are what give us the capability of securely getting rid of a cash economy. And there are a multitude of benefits that could be derived, including, from an accounting standpoint, basic bookkeeping and basic accounting, which many clients struggle with, even though they have QuickBooks and they have all these other things, could all become pretty much automated and self-sufficient, and provide the client with instant information, or provide us with the instant information to be able to advise the client much sooner about things that are happening than is otherwise possible. One of the problems that we face today is that much of what we do is historic, right? For whatever reason, the clients take weeks or months to get us the information that we need to look at to do their bookkeeping, reconcile their bank accounts. And so by the time we see something that is a problem, it's already a month old. It is always backward looking. And with the technology that's available now and that is going to be available in the next few years, that focus very much shifts on identifying issues instantly and advising the client on how to take an action for the future, respond to that. So that was the end of my slides. So let's just talk a little bit. What do any of you? I think, are you all sophomores?
There's a range. So we have some sophomores and some seniors and juniors. I think.
All right. So you're somewhere between year 2 and 4 in your schooling. Have any of you decided kind of what the direction you want to go in when you get out of college in terms of tax focus, forensics focus? There's so many different options available. When even not instantly when you become an associate at a firm, you're going to have to kind of learn the basics. How does this firm actually do what we do? But probably at the year 3 to 5 range, there is going to be a variety of options that are open to you depending on the size of the firm that you work. So, Joshua, any ideas, any thoughts of what you kind of would like to pursue in accounting?
Well, I've heard some pretty strong pitches for forensics, and it definitely sparks my interest. Audit as well. It's just, although I'm still keeping my options open because I think it's important to have an understanding of all of it. But if I was to push myself, I'd hope to go into forensics. It'd be great.
Okay, forensics is relatively small field. The firms that do forensics are pretty much all 100% forensics firms. They don't do anything else because it's a very, very specialized field. And so, but it is there. It's an option, and if you're good at it, definitely find a niche there. Roberto, how about you?
I haven't really decided yet. I am still like a second year.
Okay.
So definitely keeping my options open. But I have kind of been leaning towards tax.
Okay. All right. You know, I have spent most of my career, most of my 30 years in tax, and so you know, I kind of went into accounting and tax as a kind of financial necessity. I was managing a plastering company, a construction company, pretty good sized one at the end of the 80s. And my wife is a real estate broker, so both of our incomes were tied to the real estate market essentially. Well, the real estate market in Southern California was coming to a screeching halt at about 89, 90. And so I decided to, you know, use what I learned managing a company in accounting and tax and get into something that was more recession proof. How about that? You know, when I joined, move forward 6 years, I met David Marion and Chad Porter, whom I think you'll meet later on, right, Chana?
You know, maybe I'll make him jump on at some point.
Yeah, maybe so.
Yeah,
okay.
I think that'd be a good idea.
So he's our CEO, you know, our managing shareholder these days. But in 1996, when I first met him, he was brand new out of Cal State San Bernardino. Actually been working for Smith Marion and Company for a couple of months. And we met, I had done some accounting for the local Elks Lodge and hit it off. And I started into nonprofit accounting at that point because that's where David Marion, you know, he needed somebody to be able to refer to audit clients that they had when they required help with their accounting, when they had accounting problems. So, you know, for 10 years, we worked on a bunch of mutual clients before they talked me into joining. And then, you know, I actually came on as Bill Smith was, you know, starting to head toward retirement, and the tax side of the firm was growing. And so I came in really to assist with and be another tax resource. But within a couple of years, I'd moved over to audit. And I spent several years in audit. When we acquired another firm, jumped back over to tax because we were taking a lot of tax clients that we were handle. So just an idea, you know, to give you an idea of the kind of changes that we may go through simply because of necessity. Drake, how about you? Anything tickle your fancy in terms of what you've seen of the accounting industry so far?
So far, I've only taken my my intro to taxation class. So like, I'm still like open to anything. Like just to, you know, get my feet wet and see and just feel around it. You know, when I know I love accounting, and I just don't know my specifics yet.
Sure. Okay. Well, I mean, you know, certainly I think this will help you. I mean, we're only in the second hour here of this leadership academy, and hopefully this will give you kind of an idea. I mean, one of the problems with college courses is they kind of tell you what things look like in a perfect world, but they don't really expose you to how the process works. Okay, it's like, okay, this is what a financial statement is supposed to look like when we're all done, right? That's what you're learning. And these are the things that go into it, and these are the notes that we have to disclose. But it really doesn't tell you, you know, what's the process of going through an audit. You know, how do you contact the client? What kind of client contact do you have throughout the year? You know, what are the problems that you run into when you're when you're out there actually doing it? And the same thing with tax. I mean, the tax class is going to teach you tax rules and what a tax return is supposed to look like, but really doesn't teach you about those personal relationships that you build with your tax clients, and how the process really looks like. So the other thing that I recommend for all of you, if you're not a senior already, is try to find an internship somewhere, work for a couple of months within a firm, and kind of get an idea of what it looks like. And the other thing that you're looking for is firm culture. Like, even if you love accounting, or if you're really into tax or you're really into auditing, is it any good if you're working someplace that you don't like working, and you're working with people that you don't like working with? So all of that really goes into what you want to do and how you want to approach it. Amy, your thoughts?
I'm leaning more towards audit.
Okay. Any reason why?
Out of all of the courses I've taken, I have one class left, and I'm done with my master's. And I would like to do audit a little more so than tax.
Okay. Do you like to work in teams?
Yes, I like teams. And
okay.
I like well, if it's a good team, I like working in teams versus by myself. So
great. And how about Ryan?
Yeah, I'm actually leaning towards private client services, more on the high net worth individual side of things in consultation.
Okay. So, Ryan, would you be looking then to potentially go after a CPA PFS credential?
Yeah, I think down the road that would definitely be an option on that.
Okay. And do you have a firm that you're already looking at, or how are you thinking about getting into that field?
I do have an internship with RSM in regards to their PCS practices.
Okay. All right. Perfect. You. Okay. Anybody else? Any other thoughts on kind of where things are going?
I know this might be bold of me to say, but you mentioned internships. Is Smith Marion doing any internships for the summer?
I believe that we will have, so generally speaking, what we have is we have tax internship in the spring, winter, springtime, and we have audit internships pretty much year round. There may be a little bit of a lull in the early spring because most of our audit clients here in Redlands are June 30 year ends. So a lot of nonprofit clients, and so we really ramp up the work around May, and then the audit team really busy from early July through the end of the year. And so we usually have internships on the audit side starting in May, and again in our Tennessee office. I think they have an intern that's starting now, and although in this particular case it's an intern that already is going to go to full time unless something doesn't work out come May time. They're getting, so the Tennessee office is focused on housing authority audits, and a large portion of that is low-income housing tax credit partnerships. Those are all calendar year ends, so they're all December 31st year ends. The tax department out here, my group, we take care of those tax returns, but each one of them also requires financial statement audit. And because these are, so the partnerships themselves consist of usually investor partners that are themselves large partnerships with lots of individual investors. And so it is an absolute time crunch. Most of these tax returns have to be done by February 15th. So we literally have about a 20-day period, usually from the time that the client is ready to have their files audited to the time we have to have the tax returns out for, some 25, 30 large partnerships that we have to do. So they need a lot of help, and they're all over the country. So they're in Tennessee, Utah, California. We go all over for that traveling. As a final little segment, I just want to, we talked a little bit about kind of the forensics, Ryan, leaning more toward the personal financial specialist type of thing, and high net worth clients. Another big growing segment of what CPA firms are doing is valuation. Going out and coming up with business valuations, telling clients what their businesses are worth, what should they be seeking in terms of selling, and that also becomes part of the tax. Part of the tax side is dealing with estates and trusts and clients dying. The reality is that the average CPA firm tax client is pretty old, and they die. A couple, 3, 4, 5 per year, and so then we're dealing with the estate tax issues and valuing their business assets and succession planning and gift tax planning and all kinds of things along those lines. So, even within the audit and within the tax specializations, you can still specialize more in particular niches. Partnership taxation is a big one. It's probably the most challenging of the compliance portions of tax preparation, because unlike corporations, which are primarily statutorily governed by the number of shareholders and so on and so forth, partnerships for the most part are governed entirely by their partnership agreement. And you can write a partnership agreement in as many ways as you can have colors in the color palette. The IRS, as long as the partnership agreement does not run afoul of any specific IRS rules, the IRS is going to follow that partnership agreement. And so that becomes a very challenging segment of tax preparation, if that's what you want to focus on. And then, like I said, estates, trusts, all of these require specialized knowledge and are places where where's the wealth? Where's the wealth concentrated in terms of the overall population, right? It's the older segment of the population has had the time to accumulate their wealth and is now looking for ways to move that wealth to their heirs without possibly tax ramifications. So lots and lots of room for work there and for growth there. All right, I think we have, I have 3 minutes left. Is that correct?
You have 3 minutes left.
I have 3 minutes left. Okay, I'm open to any other questions that you guys want to throw at me. And you'll have another chance tomorrow. I think we have a Q&A session scheduled for tomorrow. So if you can't think of something now, you can always throw it at me tomorrow. And I'm open for anything right now.
Yeah, I was wondering if you could briefly speak on, sort of information gathering within the profession. I know during VITA, we would look up certain tax laws. I was wondering, what the difference would be professionally versus something in a controlled environment like that.
Okay. Most firms subscribe to some sort of a tax research library. And that includes, basically all of the research information that you have to look up. And again, becomes much, much more automated. This last year, we added what's called Access IQ to our inventory of things. And so we use CCH Access Tax, which is the CCH's cloud-based tax software. And one of the downfalls of that is that you don't have a readily searchable database of client information. Generally speaking, if you have your tax return database on your own servers, you can search that database pretty readily and say, okay, I want a list of all the clients that have a Schedule C. Well, that hadn't been possible with this cloud-based technology that CCH had. But they have now kind of remedied that, and they've gone one step further and have created basically an IQ system that is looking for tax changes all the time. They then send us a summary of what that change is. And they've already created a letter a letter template that we could send out to the clients if we so want to share that information with the clients. And it then is also linked to our client database and tells us which clients that this would affect. So every day I can pull up a list, and here's all the latest changes that have come down the line. This is what we might want to communicate to the client, and these are the clients that affect. And I can literally take the information that they put in their letter, stick it on our letterhead, mail merge to the client list that kicks out, and all of the clients that are affected by that particular change should get a letter or an email, something along those lines. So again, that's where we're going in terms of getting information out quickly to the client, being proactive. One of the most recent changes came down last week. Meals and expenses, as long as I've been around the profession, have been limited to 50% deduction. For the next 2 years, they're at 100%. So you get 100% deduction for meals expenses for the next 2 years. Doesn't mean a whole lot to somebody who's in the retail business, but if you're a real estate agent, that may be a big thing. And so, it's all about getting that info out quickly. And it's very difficult as a professional in the firm to actually spend the time to look things up yourself. I mean, again, like I was talking about the doctors who could spend all day reading things and we'd still not be caught up on everything. So we really rely on that relationship with our professional software providers to do that for us. And I think that's all the time I have. I'm probably holding somebody else up now.